So today was the day that it became very clear the Fed will do whatever it can to keep the economy and the markets functioning. The Fed rolled out 2 new lending facilities, for the first time lending directly to big U.S. companies, and it also brought back some facilities we haven't seen since 2008. So when the Fed wants, in a pinch like this, to get money out into the economy, it starts by buying the safest assets out there. It buys its own debt back, U.S. Treasury bonds. So they started last week buying Treasury and other government debt. And then on Friday, they said they would start buying municipal bonds. And what you're starting to see now is that that's not enough. So the Fed is going really a step down to slightly more risky assets, which is corporate debt. So they're going to buy corporate bonds, they're going to issue corporate loans. And that's a really unprecedented step. The markets did not respond well at all. The Dow and the S&P, big stock indexes, ended the day down about 3%. They're now off 30% or so from their highs just a month or two ago.
The market had its best day since 1933 today, and that was due to lawmakers getting close to signing a massive stimulus bill to help the economy. The Dow finished up 11% today, and the S&P 500 added 9.4%, which marked its best day since 2008. Markets have actually been very volatile the last couple of weeks, and it's not been unusual to see these really big down days followed immediately after by really big up days. For instance, even though we had the biggest gain for the Dow since 1933 today, we've also within the last couple of weeks seen some of the stock market's worst falls in history on March 9th, March 12th, and March 16th.
Wednesday was another really volatile day in the stock market. The S&P 500 rose as much as 5% in the afternoon before ending the day up 1.2%. So it was another crazy day for investors and all of us financial journalists watching at home. Stocks closed positive for 2 days in a row. That's the first time that's happened since February 12th. Wednesday's moves came with traders and investors really checking on Congress every 5 minutes or so to see where the economic stimulus package stands. So markets rose a lot on anticipation that it would pass, and then they paired some of the gains on signs that maybe it won't be as smooth. One of the most fascinating things about Wednesday's moves was the massive swings in airline stocks and Boeing. Boeing, which is a big component of the Dow, rose 24%. And that's a positive sign for some people who track short-term gains, but bigger picture, some investors are still really worried about the intraday swings and how big they are. We're also waiting to see, again, hard economic data. What's been really crazy is how fast this has all happened in only a few weeks. We actually haven't seen much hard data yet showing the really big slowdown we're all preparing for. As those data points start coming in, whether they're worse than expected or somewhat better than feared, things like that could really shape how markets swing over the coming days and into next week too.
Today we saw that jobless claims hit a record high. The number of people applying for unemployment benefits hit a record 3.3 million. So that's a sign of how this coronavirus is taking a toll on humans and the economy. It's really hard to overstate how bad this number was. This was above numbers that we saw during the global financial crisis, and it's nearly 5 times the previous high that we've ever seen. So there's this huge disconnect out there. You get these really, really dark figures on jobless claims, the worst that we've ever seen. And on the other hand, you have stocks soaring. They just ripped higher. The Dow Jones Industrial Average was up 6%, and it just logged its best 3-day streak since the 1930s. Some people think that we can actually have a pretty speedy recovery in the third and fourth quarters of this year, and other people think that, hey, we don't know, we could be in for a prolonged downturn.
So stocks ended Friday down, bucked 3 days of gains, despite some pretty encouraging signs out of Washington where the big coronavirus aid bill did get passed and signed by the president. So stocks had a tough day. That said, there were some more encouraging signs out of the credit markets. In particular, demand for this emergency funding that the Federal Reserve has been providing overnight dramatically fell. It's this very crucial part of the funding markets, and it literally keeps lights on overnight at banks and companies, all around America. 2 weeks ago, when the Fed rolled out its repo facility, it had more than $250 billion of demand, people in the market saying, I need cash. Today it had only just a little bit above 10 billion. And so that tells you that the private market is starting to do its job again, and maybe the Fed isn't needed quite so much there. One thing that's important to remember is this is at the end of the day a health crisis, and the bill that comes through Congress certainly has about $150 billion for hospitals. It has aid for municipalities, but it can't fight the virus on its own. And so markets are still going to be pretty concerned until there's better data on the coronavirus front.